I made 1.3 million in 3.5 years. I'm doubling my money every year so I'm making 100% profits on that.
With no prior experience, Rob implemented our proven investing strategies, and he went from unemployed to millionaire investor. Rob reveals the step-by-step blueprint of how he achieved these life-changing results, starting as a complete beginner.
I just been laid off. I felt like the economy had spat me out. I was 52 years old and struggling financially. I went to an event in Amsterdam, and the first thing you said was, the secret to stock trading is... The other thing that I do now, which is also very good to fight inflation, is personal development is crucial to becoming a good investor and a good trader. Trading has not become my passion, it's become my obsession. Whether you're employed, whether you have a lot of money, you need to manage it, you need to invest it, and you learn life lessons through trading and investing.
So tell us, before you had the success with investing, what was your financial situation like?
My financial situation was terrible. I just been laid off. I felt like the economy had spat me out. I was 52 years old and struggling financially. I had a severance pay, but I couldn't touch that because if I would have paid more than 50% tax. So I was really looking for something to gain an income because I didn't even have money for daily expenditures like food, rent, electricity, things like that.
Wow. So what got you first interested in trading and investing though?
Well, I went to an event in Amsterdam. It was a multi-speaker event, and that's where I saw you for the first time. And that was my first personal development event. Even the check-in was crazy. It was like checking in for a flight. I wasn't used to all of this. Now it's second nature. And that's where I saw you speaking for the first time. And the first thing you said was, the secret to stock trading is buying low and selling high. And then you said the second secret is selling high and buying back low. And then I sat up and I thought, I need to know more about this.
So let's fast forward to today. Can you give us a quick overview of your total profits, the strategies that you used, and how does it feel, to have achieved such incredible results?
Good question. The profits, I'm doubling my money every year with VCA. So I'm making 100% profits on that. I'm also taking out money as well because it's for my cash flow. And I still feel very proud, and it's part of my branding for what I've achieved. And a lot of people still see me as that person from that time. Certainly now, when trading and investing is changing that much, and people still need clarity and need to know that it's still possible, and I'm that person that gives a lot of people hope.
So you use the same strategy to go from being unemployed to being a millionaire. You still use that same strategy now?
I've changed it somewhat.
Adapted or changed?
I've adapted it actually, but I use the same strategy because it's genius. It's absolutely genius. Why? I can use it in different markets. I can use it on the Dutch stock market. I can use it on the American stock market. As long as you look at the fundamentals. And I do my fundamental research. I spent a lot of time in that, but that makes sure that I can really choose the right stocks. The other thing that I do now, which is also very good to fight inflation, is look for stocks that have high dividends. But don't only look at the dividends, also look at the payout rate. A lot of companies try to bring in investors and sell their stocks on the stock market and say, we have a high dividend, but the payout rate is low. So that's the second thing you need to check. Dividend and payout rates are very important.
Okay, you said you adapted the strategy. We're talking about VCA, value cost averaging?
Yes, VCA is my thing.
Okay, great. And so can you explain what value cost averaging actually is and how you use it?
Yes, that's a really good question. VCA is my thing, value cost averaging. I stick to the rules in the beginning. I was looking for companies on the American stock market, and there I found stocks that matched my criteria. Then I would just have to wait for a 20% drop, and from there I would buy it. Then I would either wait for it to drop a little more, or whether it would go past my entry where I bought it, and I would put a stop loss underneath it. There are some things that make it a little more difficult, like certain brokers won't let you use a stop loss. So what you have to do is put in sell orders at the price level that you want to get out. And I did it with like 5 stocks, then I did 10 stocks. And in my heyday, I was doing 65 VCAs. And that's how I made that much money. Because I made 1.3 million in 3.5 years.
Amazing.
And that was just by doing a lot of it and doing a lot of research and having the strategy and sticking to it.
Okay, but what amount of money did you start with when you first started?
Yeah, okay. When I started with around 40,000 euros. Remember I had told you earlier I had a severance pay? I couldn't touch it. But what I could do was use this severance pay as a guarantee for a bank loan. And I found a bank in Belgium that would give me a 40,000 euro loan against the severance pay. However, I had to make more profits than normal people would, because the interest would otherwise eat away my VCA profits. So I had to start making 7 or 8% VCA profits per month.
Per month?
Per month.
Wow.
Because I was paying interest and making my profit from that. I couldn't go into 3% a month, because then it would only be a loss. So that pressure was on me, and I handled it really well. And I just focused on what I needed to do. And I had monthly, I had deadlines. I had to make that. It wasn't like, okay, it was good, or it would be nice if I made that profit. No, I needed to make that profit because I needed that money to live.
How much money did you invest in each stock, roughly?
Okay, I had 40,000 euros. And depending on the price of the stock, I would either invest less or more. So like a stock like Amazon or ASML, those are quite expensive stocks, so I had to use something like $5,000 for the VCA. Other stocks, which were a lot cheaper, I would do around 500 euros or 1,000 euros, and in that way, I would buy for that amount and just keep on going with that. And I never used VCAs with more than 5 times a drop in price. I couldn't handle the 7%. The 7-time drop, because then I'd really start thinking, whoa, is this a good decision?
Did you always get it at minus 20, or did you change that sometimes?
I changed that later on. For example, my favorite stock of all time is being J&J. And I found out that J&J rarely fell more than 15%. And I knew the fundamentals of J&J were perfect. But I didn't want to wait for a 20% drop, which would never come.
And then because Johnson & Johnson doesn't go down more than 15%, rarely anyway, right? Maybe minus 20, but that's it. So you'd only have one entry point. So my question to you is, did you then put more money in?
Yes, I did put more money in. I treated it like it was a 30% drop. So you have the numbers. Minus 20, you put in a certain amount. Minus 30, you put in more. I played around with those numbers as well. And like a company in Holland, we have a company called DSM. In that time, that was a very good company. It was in chemicals, and it rarely dropped more than 10%. I got in at -10, and it went to -20. I'm like, wow, I need to get in this. This is really unique. Then it went to -25. I got in a third time, and then it went up, and it went up, and it went up. And I took that whole ride. It took me about 1.5 years, and I 300x'd my profits on that one.
300x or 300%?
300%.
300%.
Very good, yes.
Okay.
Yes.
All right.
So, these things I'll never forget.
Wow, absolutely. So what important lesson did you learn in those early days of value cost averaging? Because it sounds like you pretty much adapted the strategy.
I did adapt the strategy. It was all mindset. In the beginning, I was concentrating on the theory, but the theory it works. You need to have confidence in the theory that it works. Then you have to handle the chatter in your brain. When something drops for the 4th time, you're like, am I really doing it? So then I would check all the fundamentals again and do that twice before I'd buy for the 4th time. The 5th time, that chatter increased a lot. So I'd really be careful. The more it dropped, the more careful I became. Because the question you need to ask is, can this go to 0? That question has a hidden meaning. Can this go broke? Can I lose all my money? And if you're in a very serious way with big amounts, that's going to hurt. And so you need to look at it, check your numbers, and keep on going. And you need to increase your knowledge. Just like what I just said with the dividend. Dividend is fine, but if the payout rate is really terrible, why get in there? So you check more and more things. You do a lot of fundamental.
But why do you get into dividend stocks in the first place? Is it because of the dividend, or because it means they have a lot of cash flow, and therefore they're a solid company and have enough cash flow to pay dividends, so therefore they must be a good company?
It doesn't show me, okay, when they're paying out dividends, they are actually looking for foreign capital. A cash-heavy company can do something else, buy back their own stock. So when you're looking at institutional ownership and you see a decrease in that, because that happened to me in the beginning as well, I was like, oh wow, the institutions are selling everything. The next question you need to be asking yourself is, to whom are they selling? It's a buyback of the company. The company's buying back stocks. So they don't always pay out dividends, but they may want to buy back and use their cash for that. And a lot of companies in a pandemic and in this era time, when there isn't much cash in the world, in the financial world, they're going to hold that cash because they understand holding that cash, they can attract foreign loans against a very low percentage. Companies don't borrow money against percentages. They get that. They understand, they go shopping, they'll ask a bank or a financing company, we want that money, and we're paying 1% rent, interest. We can't do that as consumers, but strong companies will be able to do that.
Okay, so that's what you're looking for. I have a question about, you needed to make 7% a month. Doesn't that kind of like play on your mind? Doesn't that give you extra pressure?
Yes, it gives you a hell of a lot of pressure.
Is that good pressure or bad pressure?
It's bad pressure. The only way to go about that is to have goals, written goals. Because if you have these goals and you say, okay, I bought this, I needed to make 7% on that, and you haven't, then you know there's something that you need to do. So the pressure I turned the pressure into something good. Otherwise, it would have made me crazy. And it was like a sales chart, You need to make that many sales per month. This is how I did it. I need to make that percentage every month. Otherwise, I'm not making it. It wasn't like a luxury thing that, oh yeah, I have money laying around, I'll invest it. No, I needed it.
How did you turn that into something positive?
By thinking, how can I handle the pressure? Because if I have a loan and the interest is more than I'm making now, I need to stop this whole thing. It won't be working for me, and I'll need to find something else. So then I thought, okay, I need to make this work. The pressure is there, but I need to make this work. And I'm concentrating not on the theory, on the mind chatter, and having everything in a process, having the numbers. I needed the numbers. So I know a lot of people that trade don't have a trading diary. They don't have an investment. They don't keep the numbers. They don't look at their profit. That's when you're fooling yourself. If you have these numbers, it helps you handle the pressure. A number doesn't lie. It's either that or not.
So what if somebody doesn't have this, what you've turned into positive pressure, but this pressure of having to do 7%? What if they don't have that? Can they still succeed? How can they succeed?
I don't think they really can succeed.
So without goals,
Things don't matter automatically. You make them happen. And if you have these really clear-cut goals, you do that. It's like sitting at New Year's Day and thinking, well, have I grown last year? Or are you what were my goals and what is my net worth? I sit there on 31st of December while everybody's firing away fireworks, wasting money. I'm sitting and I'm calculating my net worth.
Oh.
How much did I grow that year?
That's a good idea. Where did you learn that from?
I know it came from you. You brought that idea to me.
I do it
Even
every year.
My kids do it.
Amazing.
I was out there last year, 31st of December, and I look at my kids. They're looking at the fireworks, and they're like, isn't this lovely? We're looking at other people burning their money, and we're enjoying it and not paying a cent.
Love it.
I'm like, my God, isn't this crazy? I love that, for sure.
So you've built an incredibly successful investing career,
Yeah,
but have faced some significant personal challenges, especially recently.
yeah.
So developing resilience is so crucial and yet is so overlooked. Can you share insights on the mindset shift that have empowered you to persevere, keep going, and continue your success despite adversity?
Yes, I can give you insights into that. Personal development is crucial to becoming a good investor and a good trader. You need to understand you never should give up. That means don't sit there and worry about something. Do something. That's what they mean with taking action. The action you take today will influence your future. So don't sit there today whining and thinking, oh, well, poor me and the problems and things. No, start taking action. It'll keep your mind off that poor me thing, but the action you take today, that will influence your future. Then you're not helpless. I'm saying this, but I've lived it. Like I've lived compounding. People explain compounding to me, and I'm like, you're somebody that hasn't felt it. Because compounding can be explained in one way only. Just before you're making your biggest profits, you give up. Or you stick in there and you see it explode, literally. That's compounding. But people that haven't felt it won't explain it to you in that way. So it's all about mindset. It's all about a belief in yourself. It's not about, oh, wow, how terrible is this? No, how can I get out of here? How can I do something even better? And yeah, use your time. You don't need to be productive the whole time. You can also have downtime thinking about things. And through the thinking, you come to certain realizations. Like I read a lot of books. I read something last time about a fellow from Egypt. His name is Mo Gaudar, number 2 at Google. His son died because of an appendicitis operation, a simple operation. And he is a software engineer. And he said, you know what the meaning and what the formula for happiness is? when expectations meets reality. Think about that. That's happiness.
So it's all about your expectation then?
Yes. The reality you can't change, but you can change your expectation. You're still in control of your happiness. It doesn't happen to you. You make it happen.
But in terms of, especially when you first started with investing, like what were your main kind of roadblocks or challenges that you had in terms of mindset?
The main thing was for me, I can't do this. And then you have like secondary reasons. It's too complicated. I don't have the money. I don't have the time. I don't have this. And my back was against the wall. I didn't have that choice. I didn't have that luxury. You know what really hurt me? Watching my wife wake up at 6 a.m. to have to go to her job while I couldn't. I wanted to stop that. And it worked. And I'm still profiting from that today.
So you had that pain.
The pain was huge. That's why I didn't quit.
So was it more the pain of seeing your wife having to get up at 6 while you weren't? Or was it, I need to make the 7%, the pleasure? Which one?
It wasn't the pleasure. The 7% wasn't a pleasure for me.
Was that a pain as well?
It wasn't a pain either. That was my goal. And I didn't attach an emotion to that goal. There was no emotion in that. I just needed to get that target. And later I learned to handle goals in a different way. A list of goals is useless if you don't have a bucket list next to it. So when you reach a goal, you can do something from your bucket list.
Ah.
And that's the way it works.
So are you attaching pleasure to that goal then?
Yes. But not to the end result, but to what's happening afterwards.
Interesting.
So I'm allowed to, and that's why you need a list of goals and a bucket list.
So not to the end result, you don't attach it to that, but afterwards as a reward for having achieved it.
Yes.
That goal.
Yes.
Wow. Okay. Wow, okay. So why, you said, ongoing learning. Why do you think that ongoing learning is so important to keep the right mindset as an investor?
Well, okay. Let me go back to how the investing climate was 3 years ago and how it is today. It's totally different. It's changed. How can you keep up? By learning, by investigating, by finding out new systems. All the old software that I used to use for my investing calculations and research has changed because AI is now on the market. And the software has become cheaper, more information, and it is more intuitive. So if you miss out on that and stick to the old guns and the old way of working, you won't be here now today. So I use AI. I use different programs. I don't only look at the balance sheet and this income statement and the cash flow statement. I look at different things. And this information is a lot more accessible.
Like what? What do you mean by different things? Give me one example.
I look at the debts, the ratios within a company, the EBITDA. I look at the relationship between debt equity. And yes, you can find that in the statistics, but is it good debt or bad debt? We couldn't do that 3 years ago. It was just debt. Now you can check whether it's good debt or bad debt. Are they investing in more sales or are they investing in their current liabilities? Big difference.
Big difference.
And that you can find that out now. There's a lot of software out there which is really good, and it's not that expensive anymore.
So how do you use AI?
I use it to predict, because AI won't take over what we're doing. It won't. It's an assistant. It helps you. It gives you more statistics so you can make a better decision. We are the people behind the button, yes, buy or sell. But the information is provided through AI. You don't have to look through a lot of mess.
Sure, but
You get everything diluted and everything what you need.
right, but how do you use it, like practically?
When I make a decision, I look through a lot of statistics. A lot of the statistics now is being interpreted through AI, and I get real numbers. And on the basis of that number, AI can tell you, yes, it's a good investment or not. Look through the numbers, check if that advice is good, and then you can do
You're
it.
getting advice from AI.
Yeah. There's a lot of software out there.
So let me just get this straight. So when you first made your 1.3 million, this was without any of the AI, any of the advanced stuff about debt to ratios,
Yeah.
etc., and so
Yeah.
forth.
Yeah.
But now you're adapting, you're continuing your learning, you're growing to make sure that you're continuously making those profits.
Yes, I've gotten into it so much that I also build trading robots. And I'm doing that more in Forex. But now I'm getting into stocks and building bots for that, for investing, not for trading. Because the only reason why bots are good for trading is when you're doing day trading on low time frames. If you're trading on higher time frames, like daily charts or weekly charts even, you don't need a bot. You can do that. But the high frequency trading, that's done through bots.
I'm just smiling because I remember when we first met, when you stood up and you kind of said, Marcus, this has to work. And I was like, why does it have to work? I didn't know your situation. You said, because I've lost my job and, I've still got a family and I've got a mortgage. So this has to work, And I remember thinking I can work with this guy because of the mindset. And what's so interesting is now, a few years later, you're talking to me about advanced stuff and building robots. And I mean, what a journey.
Yeah. Yeah.
But that's
Amazing journey.
but that's a reflection of your attitude and mindset.
Yeah, but I just told you this morning something you didn't know. When I walked into this office, I was looking for a glass with apples in it and the candy bars. That was my breakfast and lunch.
Okay, tell us about that.
Okay, so the first times I came here for courses,
Right, when we used to have physical courses.
physical courses here, I came from Holland by bus. And I'd arrive at St. Pancras or Victoria Street Station. I slept in the station, took the train in the morning here, and I would be here, and in the hall would be a glass jar with apples and candy bars, and that was my breakfast. So that was my mindset, whatever it takes.
So hold on, sorry, I have to. So you slept what, in Victoria? You said you slept in the station. What do you mean by that?
In the station itself.
You slept in the station?
Yeah, they don't close that because it's an international station, St. Pancras.
What?
There's trains arriving in the night and during the day. And I was there with a weekend bag, and I'd be sitting somewhere or sleeping on a bench.
Why didn't you get a hotel?
I didn't have money for a hotel.
Right, okay.
I couldn't sleep in a hotel. I couldn't even come by airplane or by train. I used to take a bus.
So you got the bus, slept at the station, took a train to us and had breakfast.
Yeah,
And that was the fruit that we used to lay out.
Yeah.
And the biscuits.
yeah.
Holy moly. I never knew this. I never knew that.
I'll tell you something else. We used to get homework here, and I'd stay here at a hotel, and the hotel was terrible. And sometimes there was no Wi-Fi, and we'd have to start trading and looking at everything. I would go to McDonald's because there they had free Wi-Fi. That's how I did my homework. And the next morning, we'd be sitting here in the course, and people would say, yeah, I didn't do the homework because I didn't have Wi-Fi. I did the homework. I didn't have Wi-Fi, but I went to McDonald's and I did it there.
Again, this is the mindset again. This is mindset.
Pure determination and confidence.
But is it because you had so much pain? Or is it confidence, which sounds to me more like pleasure?
No choice. No choice.
Back against the wall.
I'd burnt all my ships.
That's
Everything was gone.
And that's why I remember when you said this, it has to work. And I remember thinking I could work with this guy. So good.
And look what came from that.
Rob, if you could share one top tip with our viewers who are just starting their investing journey, what would it be? Because we'd love to give some inspiration for the people watching.
Just keep on going. Let me put it this way. Loss is a part of the process. Don't let it take you out. When you make a losing trade, that's good. It's part of the process. So handle the loss, learn from the loss, and keep on going. Trading has not become my passion. It's become my obsession. A day that I haven't looked at charts and trading or doing anything in the financial markets is a day wasted for me. So keep on going. Keep at it. Just keep on going. You have no choice, actually. Whether you're employed, whether you have a lot of money, you need to manage it, you need to invest it, and you learn life lessons through trading and investing. So keep just going. Don't overthink it. And that's how you make, look at where I ended up. I had physical challenges, and I just came walking today.
Can you tell us a little bit about that?
I can. Last year, February, I had my third amputation.
Okay.
Third amputation last year, February. From last year, July, I got out of a wheelchair and started walking.
So I'm assuming you're talking about your leg.
I'm missing from 5 centimeters under my knee, I'm missing all of that leg.
The leg has been cut off.
It's been cut off. It's gone. But through mindset and determination, and it was on my bucket list to come walking here. And I did.
Huh.
I could have taken a cab. I could have asked somebody to bring me. But I wanted to go to Victoria Street Station, relive that, sleeping there and the things, recognizing things, taking the train here and walking into the office. I did it. And here I am.
And here you are. And it's great to see you. It's great to see you.
Thank you.